it is time for the March 2024 Vanguard portfolio update. Let's get straight into it. So currently my portfolio has a value of £108,875.62. Now, those who have been following the channel, that has gone down from last month. Now, the reason for that is because I withdrew some money because I wanted to buy a car. And I bought the car. So obviously I do not have that money anymore. That is gone. But it kind of shows the advantages of having things in a Vanguard or in a ISA rather than a pension, because I was able to easily access the money to buy something I wanted. So cool, I did buy a car. Now this money is split between my pension and my ISA. The pension is a small pension, or a relatively small pension, sorry, compared to the ISA. And the reason is this is because of prior jobs, I was combining pensions together and put them all in one place. Now, interestingly enough, this pension has now gained £2,500, which is pretty crazy. If I was to compare that against my current work pension, that is much bigger compared to this, but in a lot more safer funds, they have not gained £2,500, I'll tell you that right now. So it kind of just shows that pension managers don't really have a clue what they're doing, and it's all guesswork anyway. So you might as well just invest in an index. Obviously, it is a bit riskier to invest in the S&P 500, but because of my age and I should have a slightly higher risk profile, I'm able to get a little bit more returns, or ideally, hopefully get more returns. Now let's have a look at my ISA. Now this is the bulk of the portfolio, £95,338.49. Oh, actually, let me just quickly go back to that. The ISA allowance is resetting in April, so this will go back to 20,000. Obviously, I've withdrawn money from this, so that's why the number says 24,000. I can put in a max of 20 and I've took money out, but I want to keep on investing, and I have been putting £1,000 a month in pretty consistently, split between this and my pension. So as seen in prior videos, I am invested fully in the S&P 500, and this is the VUAG fund, which is the accumulating fund. Now, I was previously invested in VUSA. If I was to just to compare these, VUSA versus VUAG, the only difference is one is an accumulation fund and the other one is a distributing fund, which distributes the dividends. It was nice to get the dividends paid and then reinvest them, but really there is no difference to what I was doing. Now, if you needed them as cash, then obviously that would be what you'd use them for, but I was just reinvesting them anyway. So the prices, I wouldn't look at the prices here because they are different, but the main thing is the actual percentage increase. So the blue line here is the accumulation fund, and the orange one is the distributing, and you can see basically over the last 5 years there's a slight increase on that. Year to date, the accumulation one is going to be slightly higher because obviously it's reinvesting the dividends immediately. So that is what I'm invested in. Now these numbers aren't entirely right because I've switched when I move my money over, it kind of has miscalculated. So if I look at my total here, this is from 2018 to now. It says I have contributed and withdrew 61,000 and my investments have returned me 34, and this is a Vanguard rate of return calculation. But these numbers once again aren't entirely correct because I have withdrawn money, withdrew it for a wedding and then withdrew it for a car. So obviously my increase isn't the over 50%, it's probably a little bit lower. So a website I did find actually, which is quite cool. I'll put a link in the description, but this basically shows how much money in dollars if you would invest in a certain time, and then what the value is now. So I started investing in 2018. Now I'm invested halfway through the year, but you can see if I invested $100, this would return 76% at that point, which is 10% a year. This is a lump sum investment. Beats inflation because inflation adjusted is about 7% a year, or 46. Now I have been dollar cost averaging, which would mean I have 172. So this is a really cool website I've just found. I'm sure other people know about it, but you can plug in different numbers. So even if I just started a year before, you can see that the number would have increased again and again and again and again. And I wish I was older, basically, is the long and short of it. But the best time to start investing is yesterday or in the past, and then the second best time to invest is now. So obviously things have been pretty crazy in the markets, but overall they are still going up. So yeah, that is just a quick summary on the Vanguard portfolio. Another website I was looking at actually is this stock analysis website where we can see the S&P 500 stocks. And I was kind of just looking over the different changes in the stock. So now I have it sorted by market cap. And one of the real reasons that the S&P 500, if I was to go back to here, let me just open up SPY. SPY. And let me see if I can get the actual S&P 500 up instead of that. I just like seeing the index rather than that. Doesn't make a difference, but I just wanted to say it. So if we look over the year to date, it is up almost 9.5%, and it's, you know, middle of March, which is quite crazy. Over the last year, it is up 31%. Over the last 5 years, 84%, and if we do all time, thousands of percent. But the market has been up quite a bit in the recent time. And one thing I wanted to see is if you look at one of the main reasons, stocks like Nvidia, month change up 26.8%, 6 months 100%, change year to day 70%, 1 year 250%, and this is now the third largest. Well, my third largest holding because I own the index. It is behind Apple, behind Microsoft, but ahead of everything else, which is pretty crazy. Now, one thing I was looking at, if you look at the stocks, this is a screener, and I've basically just screened out anything that's in the S&P 500, which is 503 stocks. And if you look at stocks over the last year to date, Nvidia is one of the driving ones. SMCI, Super Microcomputer Inc. I've not heard of them. A smaller cap, I say smaller cap, it's 55 billion, but up 200%. A lot of companies here I have not heard of. For example, Deckers Outdoor, up 35% in the last year. In fact, let's do the year change just to see a bit more of an increase. Super Microcomputer up 800%. Nvidia 250%. Facebook, or Meta, sorry, up 150%. Builders First Source, never heard of that, up 140%. Uber, now that was a company that people were saying was dead at one point. Well, not dead, but you can see up 130% in that time. GE, right, General Electric, another stock that was pretty dead, up 93%, which is crazy. Now, a lot of these, Carnival, obviously, probably rebounded now from that, which is up 87%. Now, the good thing about investing in the index is you don't have to make these picks. Now, if you had a crystal ball and you were like, oh, I'm going to invest in these top 10, then obviously you'd be very rich. But on the flip side, if I go over the last year, companies that are dead or dying or decreased massively, you would say, oh, of course, Paramount Global, of course, Warner Brothers, of course, Etsy, of course, WAV, Moderna, obviously that was doing very well. Pfizer, doing very well in the vaccine times or COVID times, has not done very well since. I'm sure I saw Norwegian in here before, actually. I wanted to bring that up. I might be wrong. But this is one of the things, you have to, unless you're picking stocks and quite good at picking stocks, then I'd say it's better just invest in the market. Now, you can look at these companies and say, yes, a lot of these are doing great, but if you were to then say, oh, well, actually, I thought Tesla was doing great, it's down 30%. Boeing obviously had bad times. Market Access, Paramount again, Walgreens. It is quite challenging. There you go, Carnival. So up over the last, that was the company, I thought it was Norwegian, up 87% in that time, but since the start of the year, down 12%. So depending on when you invested, you could have been hit the bad times. But yeah, I would give, I'll put links in the description on these sites. I think they're both pretty cool. It kind of shows the power of investing, and then also how difficult it is to pick certain stocks. And if we go over the last 5 years as well, Nvidia, one of the top. Builders First, don't know what that is. If we go down there, VF, Paramount, Carnival. Carnival, last 5 years, down 71%. If you invested in there, 87%. Right, guys, thanks for watching. Trying to do something a little bit. There's Norwegian. I knew I saw it somewhere. So year to date, up 50%. I misread this thing, but you can see here, a lot of these are down over the 5 years and 3 years, but a couple of winners in the last year. So anyway, right, guys, thanks for watching. Please give a like on the video if you enjoyed it. Give me some questions. I'm going to go through some questions in my April review. I'll answer some questions that were previously given in this, but I just wanted to talk more generally about the market today because I found these cool websites. Right, guys, thanks for watching, and I'll catch you guys later.